One of the easiest ways to make a lot of money in the stock market is by investing in what I would call a mega trend. It could be something like AI, something like automation and robotics, as we have a lot of manufacturing coming back to the United States, and labor here is expensive, so a lot of those factories have to be automated. So automation and robotics, that's going to be huge for the future. And I would call all those things mega trends. But whenever you're investing in a mega trend, you have to try to be early. But if you're not early, you have to make sure that you don't really overpay. Now, whenever I bought HIMS in early 2023, I was early on the mega trend of telehealth and healthcare disruption. And that's why I'm up on the stock 700%. But on the AI kind of trade, I was a little bit late. I thought it was a bubble, and it wasn't really a bubble. But you always get buying opportunities in the market. And I got my buying opportunity on CEG in early 2024. And since then, it has done extremely well as my AI kind of bet. But I have a new mega trend that I believe I'm a little bit late on. It's still in its early stages. It still has a lot of potential over the next 10, 20, 30, 40 years. I think many investors are not appreciating it enough. And again, I feel I am a little bit late, but I'm doing my analysis now. And I believe the market is going to give me an opportunity for some weird reason that has nothing to do with the stock. It always happens over the next few months or maybe even next year for me to buy the stock. And I still believe it's just an amazing opportunity. And this is mainly in the space kind of sector. Space exploration, space satellites, anything that has to do with space on the defense side or even on the exploration side is going to be huge for the future. This is a massive, massive mega trend. Hundreds of billions of dollars, if not trillions of dollars, will be spent on space exploration and anything that has to do with space. And especially right now that China is a fierce competitor in the space sector. The United States wants to compete with China, and that's going to create a lot of revenue opportunities for many different companies in the space sector. Now, normally, whenever I'm dealing with a mega trend or I'm dealing with something that's so uncertain, I don't really want to try to pick winners. I want to try to find what I would call the company that's selling shovels in the gold rush. So if you have a gold rush, you have a lot of gold everywhere, you don't want to be go digging for gold. You want to sell them the shovels. That's how, you could make a lot of money with high margins and very minimal effort. And when I bought CEG, it was just a utility company that provides power to data centers. So I didn't have to pick winners. I didn't have to do anything. I just had to bet on the company that's selling shovels in the gold rush. And this stock that I'm going to talk about is kind of doing the same thing. And this company is Rocket Lab. Rocket Lab is up 205% since it went public, I believe, in 2020, and it was through some kind of a SPAC, I believe, if I'm not mistaken. But Rocket Lab pretty much owns the space. They have a full kind of space supply chain, internally integrated, end-to-end kind of space solutions, and they keep doing acquisitions, they keep expanding their moat, they keep expanding their reach. They have three main business models, which I'm going to explain in this video, and then I'm going to give you my valuation model. The first one is Electron. Electron, you could say, is their legacy kind of product. And Electron is pretty much like a small rocket that goes into orbit, and it doesn't carry anything, any kind of a major mission. Most of it is like small kind of mission, such as Earth imaging, monitoring, intelligence, global wildfire detection, and just like, I believe, satellites also, and just very small kind of missions, nothing on the higher end, very small, very niche kind of missions. But it's the second most frequently used rocket in the United States. After SpaceX, it is Electron, which is owned by Rocket Lab. And this is a cash printing machine for them. They make a lot of money with Electron. And very recently, they figured out that because of the capabilities that they have for launch, they can also enter the hypersonic space. And they got a hypersonic contract, I believe, with the Air Force. And they have a partnership with Kratos, which makes hypersonic missiles. And the United States is a little bit late on the hypersonic game. And Rocket Lab is helping them achieve their goals. And they're also turning this business into a defense kind of business within hypersonic missiles. And that, to me, is pretty amazing. Now, the second part of their business, which is going to be the big one, and this one is coming in early 2026, and this is Neutron. Now, Neutron is made to compete with, I believe, Falcon 9 from SpaceX. It's a much larger rocket. It's used for more specialty kind of missions, much bigger missions than Electron. And they entered recently the NSSL program, which is a $5.6 billion program with SpaceX, with Blue Origin, with like 4 or 5 companies. And they're going to be competing on a lot of government contracts from now, I think, to 2029. But for them to start bidding on those contracts, they have to have one successful launch. And this launch is likely coming in early 2026. They still haven't finished the product yet. They're almost done. And their timing for that is in early 2026. And massive growth is expected from Neutron. Now, their third business model is the space systems. Space systems is what I told you guys about, the company selling shovels in the gold rush. Any kind of company that wants to build their own kind of rockets, they want to build their own kind of things, anything they want to do with space, this company, Rocket Lab, is selling them the materials, is selling them the intelligence, is selling them the expertise. And if they want to launch anything towards space, most of those companies are using Rocket Lab. SpaceX is not going to have a monopoly, and the government, the US government itself, does not want to 100% rely on SpaceX. They want to have multiple competitors because they believe it's healthy. It's the same way in the defense space, where you have some companies, Lockheed Martin wins a few contracts, Northrop Grumman wins a few contracts, Raytheon wins a few contracts. The government wants competition. And it's the same thing with space. The first one is SpaceX. It will likely always be SpaceX. But the second one is Rocket Lab. And Rocket Lab is much cheaper than SpaceX. It's much more efficient. And, it's an emerging competitor in the space. And they actually have many different sectors within space where they don't even compete with SpaceX. So the whole SpaceX kind of narrative, you can't compete with SpaceX. After reading about the company, and I could spend an hour, but after reading about it, it's really overblown. And there was an interview with the CEO about Neutron, and he pretty much said there's a lot of things where they don't make me sleep well at night, but one of them isn't the demand for Neutron. There's so much demand for Neutron and alternatives to SpaceX. It's absolutely crazy. So this is a pretty amazing comment from the CEO. But for the space systems, I like that kind of sector very much because they've been expanding through acquisitions. For example, they recently acquired a company in Europe, some kind of laser optical communication technology, and they acquired it in Europe because Europe also has a fund for companies there to compete in space. And for Rocket Lab to be eligible, they have to have a company in Europe. So now they acquired this company in Europe. It's called MILLIONAIRES, I think. And then they will be able to bid on a lot of EU contracts, which will benefit Rocket Lab in the future. And there's not many competitors in Europe, so the company is finding alternatives and is finding an opportunity in Europe, as Europe also doesn't want to rely 100% on Starlink. They want to have their own kind of systems. Asia wants to have their systems. If they want to launch them to space, they're going to be using Rocket Lab. So to me, that's just a amazing opportunity that I'm seeing. And they recently did another acquisition, which I believe is mainly through like surveillance and any kind of sensors, where monitoring sensors and other kind of things, which again, the company is becoming vertically integrated. They're doing acquisitions. And I really like what the CEO is doing. He seems very, very smart. Now, if I look at their backlog is around $1 billion, which is over 1 time book to bill, meaning if I take their Q1 revenues and I annualize them, it equals a little bit less than $1 billion. So they have a well-covered backlog in the short term, and this backlog is growing, and it will likely explode after Neutron showcases a successful launch. I think the backlog is just going to explode. But 60% of it is to space systems, which is amazing. 40% is in launch, 60% is space system. That's really amazing. Now, one of the things you have to worry about with companies like Rocket Lab is dilution. But the company isn't really diluting much stock. In fact, shares outstanding have remained flat since, you could say, late 2022, very minimal dilution for the company. And one reason for that is they had a massive cash balance. They still have around $428 million in cash and cash equivalent. The company right now is going to lose around $100 million this year, which they have $400 million of cash. It's okay. And they're going to likely be profitable. They're expected to be profitable in early 2026 after the launch of Neutron, which I think is going to be amazing for Rocket Lab, and I'm not seeing a lot of dilution. Now, if I look at the multiple of Rocket Lab, it's a little bit high. It's trading at 22 times forward sales. This is not trailing. This is 22 times forward sales. It went as low as 13, 12 times forward sales. Then it went back to 22. I would be shocked if it goes back below 10 times sales, because now everyone woke up about the space kind of sector and about the potential of Rocket Lab, and it's pretty much trading at the same multiple as SpaceX. Like SpaceX in the private markets, I believe, is trading at 20 times sales, and this one is trading at 20 times sales as well, 22 times. So to me, that's very, very interesting. But the company is growing rapidly, and they're gonna grow much faster, in my opinion, in the future. They grew 78%, 65% last 12 months. This year is expected to be 31%. With the launch of Neutron next year, 55% revenue growth is expected. But if I had to bet on this company's growth, I would bet that it will likely grow around 25 to 30% a year beyond 2026. And I think it could even grow 25% a year from now to 2035. This is how high the demand is for space, and this is how rapidly this industry and this sector is growing. So I see massive revenue growth for many years to come for a company like Rocket Lab, especially if they continue to do acquisitions and to innovate. But in my valuation model, I'm going to use two case scenarios. The first one is 25% a year in revenue growth. The second one is 35% a year using many different multiples. And then I'm going to give you my fair value. Now, in 2026, after growing 55%, the company is expected to make $890 million in revenues in 2026. So I took the $890 million and I put in the 4 years after that to get the 2030 potential revenue target. And I used 25% a year, which I believe is highly achievable for a space company like Rocket Lab. I got $2.1 billion in revenue by 2030. Then I used two different case scenarios. The first one is 25% growth. The second one is 35% growth. Now, if I use 10 times sales on 25% growth, that's only $45 per share, or 50% on the upside. Now, I believe for a company like Rocket Lab, I don't think it's going to go back to 10 times sales or below. I would be shocked. Even the recent pullback could not take the stock below 10 times sales, as everyone knows how important space is. So I would be more willing to bet on 15 times sales than 10 times. 15 times sales is $67 per share, or 125% on the upside. 20 times sales is $91 per share, or 200% on the upside over the next 5 years. That's pretty amazing. And if I use 35% growth, which is like the best case scenario, on 10 times sales, I get 100%. 15 times sales, I get 200%. 20 times sales, I get 320%. Now, I hope I'm not confusing you with this one, but I'm trying to show you different outcomes. Now, for me personally, the way I would look at Rocket Lab is with a risky stock like this one, there's a lot of things that could happen, some launch failure, and then it causes crazy things to the company, massive damages to their financials or reputation. I mean, a lot of things could go wrong. So if I'm trying to look for a double over the next 5 years, I want like a triple with this stock. I normally look for doubles, but in this one, I want more reward for me to be buying it. So my sweet spot for the stock is 25% revenue growth and 15 times sales, which I would need 200% on the upside for me to buy the stock, which is Rocket Lab. And for me to get 200% on the upside, I have to pay no more than $25 per share. So the stock was trading at $25 not long ago, actually, but I did not do my analysis back then. I didn't really know much about the company, but I think under $25, especially closer to $20 per share, it would be an amazing buying opportunity on Rocket Lab. I would buy it around $10 billion in market cap. And if I think of over the next 10 years, SpaceX will likely be $1 trillion company, and Rocket Lab will likely be $100 to $200 billion company. So if I'm buying it at $10 billion, I'm likely going to get 10 to 20x over the next 10 years if they do execute. If they don't execute, then I would have paid you could say some kind of a fair price, and I would have some kind of margin of safety with a speculative stock like rklb. So again, maybe that wasn't my best analysis, but I'm still studying the company and I wanted to share what I found with you in the video. A very interesting one. So I hope you got some ideas. I hope you enjoyed it. Not financial advice. If you did enjoy it, please press the like button and maybe consider subscribing. So I'll talk to you in another video.